Still back here with me, Emmy Hernandez on Smart Money. Derek Giorgino, a CPA. Hey, Derek, last segment we talked about, the limitation on write-off on state tax and property tax, all that.
Right.
So that will have impact on itemized deductions, right?
Right.
So you were telling me that this year standard deduction got bumped up and some of the itemization got limited. So probably more people will choose to do standard deduction than itemized.
Sure.
But there's another thing though. After you do the standard deduction, something happened to the personal exemption, wasn't it?
Yep.
So
they got rid of it.
Yeah. So that's gonna also impact the bottom line. So can you tell us a little bit more about that?
Yeah. So the personal exemption was essentially $4,050 for each
Per
member of your
person.
family that
Yeah.
you could take off.
Mm-hmm.
That's gone.
Oh,
But
boy.
the good news is they increased the standard deduction by well over the amount of the former
Would that
personal exemption.
make up for most people?
I mean, it would depend on the size of the family, and it would depend on a number of things, right? And that's the thing with tax law. You can't take a change and apply it as a blanket over the entire American population, right? We have 300 million something people here, right? So each scenario is going to be a bit different, but the standard deduction nearly doubled, right? So we were talking about it earlier, from $6,500 for a single filer to $12,000, right? That's an increase of $5,500.
Right.
The personal exemption was $4,050, so it was about $1,450 higher, right? The increase was, so they would still make, that person would still make out. So it's going to depend.
So there's no magic formula.
No, no.
Okay.
You're going to have to assess it on a case-by-case basis.
And I think we do have a slide for these for the viewer. We talk about, like, for example, if we have a family of 5,
Sure.
and if that family in particular do just a standard deduction. So prior to 2018's return, they would have, just a regular standard deduction, but they have $4,050 personal exemption per member of the family, right? So on the slide would show that the bottom line, they will have standard deduction plus personal exemption total maybe about $32,000 altogether. Now fast forward to 2018 return, they got the double on the standard deduction up to about $24,000, but no personal exemptions. So now from 32 to 24, so they actually lose almost $9,000 in deduction if they go that way. So, wow, that hurts.
Yeah.
For family with kids, right?
Sure.
So,
sure.
But good news, right? I think you told me before we come there's a child tax credit increase.
Again, case by case basis, right? So family that large with these kids, yes, it will hurt them, but they'll get an increased child tax credit. And if they take that will help out a bit. And they doubled that child tax credit from previous years.
So it's getting up from $1,000 to what, $2,000 per child?
Yep. And on top of that, right, the amount of people who could take a child tax credit was lower than it will be now, because they quadrupled almost the phase out. Right. So if your family made a certain amount of income, that credit began to phase out. I think $50 for every 1,000 or so above that threshold. Don't quote me on that. Forbes and other websites, by the way, have great articles on exactly how these phase outs work. So I would check that out if I were your viewers. But they quadrupled the phase outs, which means that way more people are going to be taking these child tax credits because their income is not going to meet that threshold, or it will be barely over. So the credit will barely be phasing out. So that's the good news for some of these families, is most likely they're going to be able to take the child tax credit now at an increased amount of $2,000.
Right. So for the same example, family of 5, so we got standard deduction, which is $24,000, right? And then we have child tax credits now is $2,000 per kid. So if you have if you have 3, so that's $6,000. So that will increase 24 plus 6, so that increase it, to about 37,600 something that we have the slideshow. So there you go. So that more than the 2017. That's quite a bit of increase. So that's good. That's good news. But I think, like you said, it's not for everyone. There's some phase out still, even though they increase the level threshold a little bit. So for the viewer out there, first thing they wanted to do is probably talk to their accountant and find out to see if they have a qualifying child, right? And if their income's still in that range to take advantage of this.
Sure. And also something to note is that a credit is different from a deduction. right? So a deduction, say you take a $1,000 deduction,
Mm-hmm.
well, really the money you're getting back is that multiplied by your tax rate, right? A credit is a
Correct.
dollar for dollar almost refund, you could call it, where you're getting that entire $2,000 in your pocket, right? You're keeping that. It's not like a deduction where you're going to multiply it by a tax rate. So credits, whenever you hear about a new credit or an increased credit, that is more than good news. That is great news because you're getting every single dollar of that to remain in your pocket.
Great. That's a very good point because it's dollar per dollar deduction. And for my example prior to that $6,000 additional child tax credit, if you on about 22% tax rate, that probably convert up to about $13,000 in deduction.
Sure.
So that's really great. Now let's touch upon this a little bit too, because I heard that in order to use child tax credit, you have to have a qualifying child.
Yes.
It has to be your dependent, right?
Yes. So I've actually got a list of things here.
Good.
So
all right.
I can literally read these things out for your viewers, right?
There you go. Good.
Child must be under the age of 17.
Uh-huh.
Child must be your own child, a stepchild or foster child. There's also a support test for this child, meaning that your kid can't be well off. He can't support more than half of his own financial support.
Okay.
Right. So there's a dependent test. You have to claim this child as a dependent on your tax return. Right. Child must be a U.S. citizen, of course. Residence test. The child must have lived with you for more than half of the tax year. And there are some exceptions to that, I think, if your kid is in school and so forth and so on.
Yeah.
But those are all of the criteria, most of the criteria that your kid is going to have to meet in order to claim that.
17 or younger.
Correct.
Right?
Yep.
Okay.
Correct.
And additional for that, this year, I think they also they add on that child must have social security number.
Right.
For this year.
Right. And that kind of goes hand in hand with being a U.S. citizen as well. So that goes into that as well. So they're checking for that. They're checking to make sure your kid is a citizen, and there are a number of other criteria as well.
Yeah, that's interesting because some of my clients, their grandchild they'll have, but they're born here U.S. citizen, but they never get social security number until later on. Right. So now, you got the child born, you just better get that right away.
Yeah.
I think that because of that, also now they increased. They increase one more additional non-refundable tax credit for non-qualified dependent. I think it's like $500, so something like that. So if your child don't have Social Security, for example, or maybe older than 17, and you cannot qualify for the regular child tax credit, maybe you should check with your accountant to see if you can
take that $500.
Yeah, $500. So that's something still a little help, right?
Yeah. I mean, it depends. I mean, it's not much, right, in the large scheme of things. I mean, if you can, you want to take that $2,000 child tax credit. But if there's some kind of workaround and you can get the $500, of course, do it. Right? Your duty is to, your duty as an American is to pay only the taxes that you need to pay.
Exactly.
Right? So tax evasion is a crime. Tax avoidance
it's not.
It's your right. So.
Right. Okay. Yeah. So there's some more stuff that we're going to talk about in the next segment. We'll talk about something that help out with people who has their own business.
All right.
Yeah. Okay. When we
Let's
come back.
talk about it.